The market moves higher as we gain clarity on its next moves. What happens next? This is Invest with Jacob. Okay, guys, so for the last week or so, we've been talking about this overlapping structure and what happens next, and we finally are starting to get some clarity as the market moved higher yesterday out of the range we were looking at, and now it does look like it's trying to extend. So now the question is, what happens next? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, as always, before we jump into the chart, we are going to check our indicator, and today we're going to do something a little different. We're going to talk about the swing trading portion of the indicator. We usually go over day trading, but yesterday was another really tight range in the first half of the day, and nothing really happened. And I know that not all of you are day traders, so I want to show you the value of the swing trade in the indicator and how strong it is. It's really the best feature, in my opinion, but I do mostly highlight the day trading aspect. So let's jump into the chart and take a look. Okay, guys, so here we are on the weekly SPY chart, and I have the last 2 years of data up from November of 22 to basically November of 24, but the start of December 24 to show you how powerful this indicator is for long-term plays. For those of you that are buy and hold or like longer-term options or things like that or want to know when to take profit, this is a very powerful tool. So as we look at this, we're on the weekly SPY chart and we are in trading view. You must have trading view for this to work properly, and you do need to have real-time data for the ES and the NQ as well. How the swing trading portion works is on the weekly time frame, you still have the buy and sell alerts, which are very normal, but you also have stops, and how those work are different. So in day trading, stops mean just get out of the trade. However, in swing trading, stops mean resumption of the trend. And so what we look at is we got a buy all the way back here in November of 22. And if you took that buy, no big deal. You got about $14 of profit, but you're supposed to stay in this until you see a sell signal. So we go all the way over here to where we get a sell. And immediately the very next week, you get a SS, which is a short stop, meaning if you are a person that doesn't want to short the market, you could have taken a little bit of profit here. You see that that got stopped out. And that means resumption of the trend. Since the trend was up, we should expect the market to continue in the upward direction. And that's exactly what we see. So if you got in right here at 420 and got long, in just a couple of months, the market shot up to about 458, and you got 38 points of SPY gain in just a couple of months. Then you got a sell signal here, and you could either short or get out of the market. And what happened was you got a 450. They took it all the way back down here to 409. So if you shorted, you got 41 points of downside. And then they came back up and you got a buy signal right here. And even if you took it at the very top at 450, okay, again, they took it all the way up to 517 before you got a sell signal for $67 of upside just over a few months. And then you sell, and again, the market pulls back and you can get back in when you need to. So this indicator, okay, you get if you shorted here, you did really well. You get back in long here for the resumption of the trend, 542 up to 563, so another 20 points of gain. You got a sell signal here, came back down, you made some money there. You got a resumption of the trend here, so you got in at 553 up to 564, $11 over a couple of weeks. You got a sell signal, comes back out, stop, resume the trend. Right here you got in at 570 and up to 608. So this is a really great way to protect your investments. It's a great way to do long options, long-term options like leaps or multi-month options where you can take profit on the sells and you can use the stops as continuation of the trend. This is a really powerful tool, and it's helping traders really understand the market. I know we've highlighted day trading a lot, but the swing trading portion of this is extremely strong. It keeps you on the trend, it keeps you where you need to be, and it understands where the weakness in the market is. So as you can see on the chart over the last 2 years, the data is unbelievable. It's something that can help everybody who trades. I really want you to be a part of it. So what I do, first, if you want to get it, there's a link down in the description, okay? That'll take you right over to where you can get the indicator. It's $59 a month, but as you saw, those gains would absolutely pay for years and years and years of this indicator just by using the weekly part of the indicator and understanding where your positions are and when to take profit. It's $59 a month or $590 for a year. You do get a discount for the yearly. And what I do, because I love this indicator and it's so powerful and I have years and years of data on it that you can see on the chart, I will give you a 30-day money-back guarantee. If you get it and use it for 30 days and you just don't think it's worth it or you don't want it, no big deal. Shoot me an email and say, I'm not interested anymore, and I'll refund your money. This helps all traders understand the market and make money, and makes it super easy to understand the trend and when the trend is weakening. You don't have to listen to the news. You don't have to listen to your friend. You don't have to look at 100 charts. You simply wait for the indicator to tell you when to get in and get out. It's an amazing thing. I stand behind it. I want you guys to have it. 30-day money-back guarantee. All right, guys, now let's jump into the chart and take a look. Okay, so here we are on the 1-hour futures chart for the S&P 500. And I want to address something in this video that happens quite often with these, where I give multiple paths because I want you to understand where it can be wrong. And the people say, oh, you just pick up and down and then you can't be wrong. I want to highlight why that's wrong, that viewpoint is wrong, and why to understand these multiple levels and why they're helpful. So we've been looking for this to be either kind of a leading diagonal here where you had 1, 2, 3, 4, and 5. We wanted that to hold around 60.85, and since they've pushed through that level up to 6,100, we would look for this to be more of an extended wave 3 and then look for 4 down. Now, when does 3 stop extending? That's a great question, and this is where levels matter and understanding the two-way action matters. Can they go higher from here? Absolutely. 61.50 would be the next target. However, if they break down below this level right here at 60.46, we would expect them to come down to the 59.50 area because wave 4s tend to get into wave 1 territory. This is a very strong indication of when to get out of the market and wait for a better setup. That's why we have the two-way paths. That's why we have an up path and a down path. Because the up path, can we keep extending? Yes, you stay on trend until the trend ends. Its pressure is up until support breaks. That's not a cop-out. That is an understanding of where the market breaks and changes character. If you want to understand the market, if you want to understand why it moves, you need to understand the key levels, whether it's through Elliott Wave, whether it's through price action, whether it's through some other indicator that you use. It doesn't matter. The key levels are the key levels. And so the price up and the price down isn't so I can be right. I could care less about being right. It's so I know where I'm wrong, where I can change my trades, where I can understand when the market changes. That is the power of Elliott Wave. That is where you get to understand when and where to get in and get out of the market. Once you figure that out, and once you figure out that these levels matter, and it's not just saying it could go up or down, then you can be a successful trader. So the key level to the downside, 60.46, they break through this support level, and we likely see a cascading event down into wave 1 territory, if not further. They could possibly break down from there. We will see what happens at wave 1 territory. But what we look for then is a reaction, okay? So they come down in wave 4, we see a reaction, and do they have to get all the way down here? No, they don't have to. We would look for a reaction and a bullish turn, and then we have something we can trade on. We have a high-low. We have a stop down here now, and we can get long looking for this wave 5 up to 6,300 with an easy stop. That's why we have two paths. This is where I'm wrong. This is where my stop is. This is where I'm wrong. This is where my stop is. We can keep extending and taking profits to the upside, know where we're wrong, and be excellent traders. This is how it works. This is why my live room is so important. This is why understanding the market is so important. I really want to highlight that because the comments on these things are so silly. The people who don't understand the market and just want to, be sad that they don't understand the market and tell me, oh, you're just doing two ways. I want you to understand the market. That's why I'm here. That's what I'm doing. And that's what we're doing here. So your key level to the downside, 60.46. They break through that. We're very likely on our way down to the 59.50 area. In a straight line? No. Remember, wave 4s are ABC, so you probably see something like this. Okay, you'll probably see a three-wave move to the downside. But ultimately, 60.46 is what we're looking to break. Can it be more of a straight line function? Sure. But if 60.46 breaks, that's the key to the downside. For the upside, they can keep extending. As I said, the next target is 61.50. Regardless of how high they extend in this 3, we would still look for a pretty deep pullback in wave 4 and then wave 5 after that. So we are looking at a diagonal structure. When diagonals fail, they fail hard and they fail strong. So if they do come down and they can't hold here, it's very possible that this was a wave 5 and then they broke through our next key level, which would be 58.82, this wave 2 low. that's how we know that the diagonal has failed and we are looking at more downside and a stronger move down. So key levels matter. That's what we talk about all the time. So we talk about in my room. This is stuff that we teach, that I teach, that PT teaches. It's stuff that really helps you understand the market. So that's why we have two paths. That's why we have two levels. I really wanted to highlight that today because so many of you don't understand that and think that I'm just here spouting out things for no reason whatsoever and just saying up or down, who knows, ha ha ha. That's not the case, guys. I'm giving you the keys to the market if you'll just start the car. All right, over on the NASDAQ. Okay, on the NASDAQ, I talked about the fact that it should outperform the S&P if we're going to be bullish, and it has very strongly outperformed the S&P the last 2 days. It was over 2-to-1 stronger yesterday and about 6-to-1 stronger the day before. It's really shot up out of here, which is what we would expect, while the S&P is lagging a little bit over the last few days. We would look for the NASDAQ to continue leading this market if we're going to be bullish as it was lagging before, and it will play catch up. So we're seeing it play catch up here. It's filling out this wave 3. We had our fibs up here at the 21,459 to 21,585 area. And we are in that zone now. So this is where we would expect wave 3 to end. However, as I've talked about, wave 3s can extend. So where do we get confirmation on wave 4? It's going to be on a break, okay, of 21,150. This low right here will lead us down into likely the 20,900 area. Into wave 1 territory. It can come all the way down to 20,500. So this whole wave 1 to wave 2 area is valid for a wave 4. And remember, diagonals do overlap quite heavily where wave 4 gets into wave 1 territory. So this is where we're wrong, or this is where wave 4 starts, however you want to look at it, 21,152. Below that, we would consider this in wave 4. We would look for a reaction, so some kind of move down that gets a bottom and then a setup. And then we have something to trade off of. We have a low here that we can trade off of with a stop here. And now we can look for that final push up toward that 22 to 23,000 area, having a 2,000 point gain off of this with about a 100 point downside. So that's how this works. That's how we set this up. That's how the Elliott Wave concept works. It's not that we're here to be right every time because we give you an up or down. It's that we're telling you where we're wrong. That's what you don't understand. And when we're wrong, that's when we adjust to the market. The market adjusts every single day. We get new prices every single day, and we have to adjust to that. If you want to stay rigid to whatever your belief is, you will lose money in the market. You need to adapt. You need to be able to change daily, and you need to understand why you're changing. So that's why we use Elliott Wave, and that's how we use it. Right now, we're looking at this 345 to complete. Any break below 20,500 would be an indication of a bigger breakdown and a failure by the bulls. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to our website. Once you're there, check out our membership plans area. We have 2 incredible plans that both come with a 7-day free trial. If you want to see what this is all about, get in there for free. You don't even have to trade or do anything. Get in the room for free. Listen, watch, learn. Do it for a week, and if it's not for you, cool. If it's for you, great. We have you on board. We'd love to have you and train with you and show you how to do this. It's an awesome place. You get to meet everybody, you get to interact, and you get to do it all without ever spending a penny. You can cancel at any time, and you literally have nothing to lose. Now, on top of this, we also have incredible training material. If you want to understand how I do Elliott Wave, we have our Elliott Wave 4 Beginners course here, and we have our Advanced Elliott Wave course here. In these courses, especially the advanced course, we go through some really powerful understanding of the market, understanding of key levels, the complex patterns such as the triangles, the diagonals, the double and triple threes, the flats, how to trade Elliott Wave. And we go through that in a bite-sized chunk level so that you can watch 5 to 10 minute videos on each thing, kind of go apply it, learn it, and then come back and learn the next lesson and build upon that. And really, if you haven't really studied this at all, you want to start with our Elliott Wave 4 Beginners online course. This course is helping real traders make real money and understand the market in a way that makes sense. In that course, we go through 3 parts. We have an introduction where we go through your Elliott Wave Theory expectations, your mindset and emotion, why it works, all those types of things. We do a chart setup, so we get your chart completely set up with all the tools we use with Elliott Wave, how we use them and why we use them. And then we go through each of the waves and show you how to measure them, how to find these key levels, and how to understand the market in a way that makes sense. The really cool thing about both of these courses is if you want to get them at a discount, we do have our bundle pack for $37 off. You can get both courses and get the full Elliott Wave training material guide and go through them and understand the market. However, if you really want to get them at a cheap price, like for free, check out our monthly rooms, as they are included in these prices. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go through gold, Bitcoin, obviously the ES, the NQ, the SPY, all those different things. We go through any chart you want to look at. I give you the key levels. I give you the trade setups. We just did a huge trade on NVIDIA at 132. It is now at 144. Things where there's great setups, I give them to you. That's all on that call. And then on top of all of that, you get the training material, which is the beginner's course and the advanced course, all for just $49 a month. We trade the SPY and the QQQ, and we swing in day trade, so we do trade quite often in my room. If you are looking for futures trading, individual stocks, income trading, and advanced trading, you need to check out PT's Throne Room. In there, you get futures trading, individual stocks, his income trading method that is crushing the market, as well as his advanced trading, reduced risk binary method that gets you in at a cheap price and gets you big multiples on your money. And it's how he structures that trade that's so unique, something you really have to see to understand. And that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today on the ES. Wave 3 is underway, we believe. It can extend. 6150 would be the next target. A break of 6046 likely turns us down into the 5950 area, where we'll look for a reaction off of the Wave 1 top. Over on the NASDAQ, Wave 3 is underway, and it can extend with the next target being 21,585, and then 21,917 after that, although I don't think it'll get directly there. A breakdown of 21,150 would indicate that we're in Wave 4, and look for a reaction down here off of this 20,008 to 900 area before getting Wave 5 back up. Guys, that is your market update for today. I will talk to you tomorrow.